What's up, guys? I'm David Pere, the Military Millionaire, and today I want to talk to you about my real estate investing strategies for 2021 and how they have kind of changed and what I'm planning to do going forward. Because I get this question a lot right now because the market, as everyone knows, is kind of up in the air and no one seems to know what's going on. So I am primarily focused on buy and hold investing and wholesaling. Now, wholesaling, for those of you who know, is like find something off market for a great price and then you flip it to somebody else so they can buy it and do the renovation and all that stuff. Wholesaling is similar, except instead of assigning a contract to a house flipper or whatever, you're literally buying the property, cleaning it out a little bit and listing it on the market, which is great in a seller's market like this because you might be able to drive the price a little bit higher. So if you find stuff that's kind of like a lipstick or could be a live and flip, you're affording that opportunity to home buyers, but they might be able to pay a little bit more or willing to pay a little bit more. Then obviously buy and hold is my main, I've got 20 units right now and 21, it kind of fluctuating because we're buying and selling some stuff, but that's my main bread and butter is holding rentals for the long term. I'm just kind of focused on paying down debt and building capital before I get more into holding, as opposed to right now where I'm focusing more on the wholesaling to pay off that debt and build up capital going forward. A few specific differences in 2021. I am focused way more on off-market deals. In my market, I've been able to find stuff online that was on like the MLS that's been pretty good deals, and that's still somewhat true, but I'm really focusing on texting and direct mail marketing to get in front of landlords and sellers to really try to drive home finding those deals off market and getting the bottom dollar possible on them so that I can turn around, make a little bit of profit, and still have room for other people. I need more equity this year to strike on a property. So I'm not trying to be in for anything more than 70% of the value of a home. I'm trying to have that equity buffer so that if the market dips, which I'm not super concerned about, but if the market dips, there's a large amount of buffer there, 30%, for me as far as before I go underwater and have to start worrying about anything. I'm running my numbers for anything I decide to hold much more conservatively. I am budgeting like 10% for vacancy as opposed to my normal 7%, even though it's really been 5 for the last few years, but I'm budgeting 10%, which is like double my normal vacancy. So I'm assuming that I'm gonna have, one month to 1.5 months of vacancy for every unit, which is good because it's more conservative, although I've really not seen that bad of anything with tenants going on right now. My tenant base has actually been all right. 2020 I did okay. I had some issues, but nothing that I could say, oh my gosh, COVID really messed with my tenants. But if you buffer that extra vacancy in there and you're still cash flowing, then you're okay. It's always better to budget more conservatively than over. And I'm kind of budgeting a little bit more on expenses too. Things like repairs, right? The price of materials has gone up like 15-20% depending on your market. So budgeting a little bit more for repairs and maintenance just because the cost of materials has increased. And so I've increased that by 1 or 2% in my capital expenditures budget, but just be a little bit more conservative with anything that you plan on holding for the long term. Now, I am definitely looking to take on debt. I don't really like the idea of buying cash right now. I mean, I'm buying some of the smaller stuff cash, but if you're holding anything, take advantage of the super low interest debt that we have right now. I don't know that we'll ever see debt this low ever again. And so when you buy debt at 2 or 3 or even 4%, you're really doing good things as far as if that property cash flows and you can hold on to it, because that will make the property more valuable. And there's a lot of avenues of how that could increase value. I mean, obviously having that debt is super valuable, but if it's an assumable mortgage, then you could potentially sell for higher later to somebody who wants to take over your loan as opposed to having them get their own financing. There's a lot of options there. It really depends, but for me, it's just like having that debt that's that low interest is a hedge against inflation, appreciation, everything else, and you're really winning when you get 2% interest on tens of thousands or hundreds of thousands of dollars worth of debt to help you buy assets. I am building a little bit of a cash position. I don't want to be too heavy here. I know there's a lot of people saying that they want to hold cash and be cash heavy so that they can buy everything in sight if the market plummets. Take advantage of all those deals. But I think this is kind of a double-edged sword right now, because if inflation hits at the amount that people are predicting it could because of all the stimuluses and money that has been printed this year, and you're holding cash, that's really going to take a hit much worse than if you have assets that, like, real estate is inflation hedged. So as the value of the dollar drops, the value of real estate will kind of correlate to help hedge against inflation, because that's just, I mean, land itself is value, holds its value even if the dollar fluctuates. And so I think that having that super low interest debt, again, locked in on real estate is going to be more beneficial than having $1 million in cash, where if inflation hits at 10%, that million is now worth like 900. So food for thought, but I am holding cash. I'm trying to build up 50 to 100,000 in just liquid operating capital to keep rolling, but I'm not really trying to build more than that. Above that, I'll be buying and holding. I am trying to scale my flipping, wholesaling, wholetailing, and everything else while there's momentum in the market. Right now, there's an incredible amount of momentum in the market, and so while it is intimidating, I am trying to keep rolling with those wholesales and wholetails and buy and holds and the off-market deal finding, because I want to catch that wave and ride it. Now it might die out, so I don't want to hold too many of these things, and I don't want to be stuck holding the bag, but I think it's valuable to be able to take advantage of this momentum to get some scale under you, and then you can always pull back, but just make sure you're not overextending. So you want to be cautious while you're doing this. Don't scale to a point where you're going to be just totally screwed if the market slows down or falls, but definitely take advantage of the momentum if you've got it. I am personally staying away from a lot of partnership opportunities unless it's like a really good friend or I have the controlling interest in the property. Not that I have anything against syndications. In fact, I think there's a lot of really good syndications out there, but I just personally, I want to be either controlling the asset or have it with a good friend where we can talk things out. I don't want to be taking on a ton of debt with somebody if I don't know them that well, or if I have no controlling interest in the asset, just because if something happens, I want to be able to have a say in those decisions. Last but not least, I plan on using my VA loan to buy a fourplex in Missouri when I move back there and house hack. And I'm actually kind of in a weird spot where in San Diego, if there hadn't been a limit on the VA loan when I moved here, I absolutely would have bought a big fourplex, but the limit was still in place. So kind of bummed that I didn't back when I first moved here, but it just wasn't possible yet. And it doesn't make sense now because I'm leaving, but I'm trying to buy a fourplex to house hack with the VA loan in Missouri. And it's interesting because the prices are so cheap, which I love, right? The cash flow, not appreciation, like it's a great game, but it's almost too cheap. And what I mean by that is I'm kind of bummed that if I buy a fourplex, I might be able to get it for like $200,000. I'm actually trying to look for like a high B class or an A class nice duplex or fourplex for like the $400,000 to $500,000 range, which is actually like more than probably what they're worth. The reason being that debt on the VA loan is so cheap right now that I almost feel like I'm ripping myself off if I just buy a $200,000 duplex or fourplex when I could buy a $500,000 fourplex and be paying that much more down in principal and having that much more leveraged at this kind of interest rate. As long as it's in the right location and the path of progress is going that way, I'm willing to pay. Now, don't get this twisted. I'm not saying I'm willing to pay more than what a property is worth just to have the debt. I'm saying I'm looking for higher class assets to use the VA loan on so that I can have that. Normally I buy B and C class properties, but if I can have an A class fourplex or even like a really nice house with a second living unit downstairs or an ADU out back where there's more debt, there's more principal pay down, but it still makes sense as an investment because you have that higher quality tenant and that higher rental income coming in. That's kind of where I'm trying to pull the trigger here. I'm looking for a little bit more debt in that house hack and a higher quality area than what I normally buy, because I think that the debt is actually very valuable on that property. So that's kind of what I'm thinking right now for 2021. I'd love to hear your thoughts. I know this is kind of just spitball. I wrote some bullets down. I wanted to throw it out there. That's kind of my thoughts. Let me hear, what are you guys thinking for 2021? What do you think the market's going to do, and how are you preparing for it?